Welcome to our channel. Choosing the right life insurance beneficiaries is crucial for ensuring your loved ones receive benefits smoothly. Follow these step-by-step instructions to create an effective beneficiary strategy. Step 1. Understand the difference between primary and contingent beneficiaries. Primary beneficiaries receive benefits first, while contingent beneficiaries receive them if primary beneficiaries can't. Step 2. Consider naming multiple primary beneficiaries and specify the percentage each should receive. This ensures clear distribution of your death benefit according to your wishes. Step 3. Avoid naming minor children directly as beneficiaries, as insurance companies can't pay benefits directly to minors. Instead, establish a trust or name a custodian under your state's law. Step 4. Review and update your beneficiaries after major life events including marriage, divorce, births, deaths, or significant financial changes. Outdated designations can cause unintended consequences. Step 5. Be specific when naming beneficiaries by including full legal names, dates of birth, and social security numbers to prevent delays or disputes during the claims process. Step 6. Consider the tax implications of your beneficiary choices. Spouses generally receive benefits tax-free with more options, while other beneficiaries may face different tax treatments. Step 7. Coordinate your life insurance beneficiaries with your overall estate plan, including your will, trusts, and retirement accounts to ensure all documents work together seamlessly. Step 8. Inform your beneficiaries about the policy's existence and where to find the policy documents. Keep records of policy numbers and insurance company contact information in an accessible location. Don't forget to like this video and subscribe to our channel.